Good morning, and thanks so much for tuning into the Trade Setup. I'm Neeraj Shah. Let's take stock of the global news flow and what could happen going ahead as well. So keep in mind, I mean, the picture is a bit mixed, if you will. So the U.S. economy grew at 4.9% pace, which was the fastest in 2021. So that was okay, but the cues up ahead are not necessarily the best. Oil is set for a weekly drop, which is actually a positive, and amongst other things, conflicting cues around China and US keep on coming. So there is China and US releasing dueling videos with accusations of provocation. At the same time, Janet Yellen saying that the US relationship with China is in a more positive place. Remember today, or rather Friday, US President Joe Biden means Wang Yi as well. So there's lots happening out there which is beyond the realms of normal understanding. We'll try and get you as many cues as we can from people who probably understand it more over the course of the next few shows as well. But the U.S. stocks had a weak day. You would have to admit that the Dow, the S&P, and the Nasdaq in particular, 1.76% yet again, and those tech names continue to come off. In fact, the from what I understand, the S&P 500 and the Nasdaq in particular actually is very close to how do I say it? The S&P 500 it edged to the correction point, down almost 10% from the July peak. Nasdaq fell 2% as well, 1.76%. Meta slumped despite decent numbers. A bunch of others, Nvidia, Microsoft losing over 3.5%. So the US markets was not in a ship shape. The yields though came off 4.84 at maybe 7:30 a.m., 4.86 at that point of time. So that is not too bad, but it's very volatile and still uh, pretty high, if you will. So no big changes there. Um, I don't know if closer to this key level from an index perspective in India, is the gift nifty showing a bit of resilience? Sure, it could. And that's the key point. It was one, remember that it, so let's bring the trade setup up. It was a downtrending day yesterday, but the global cues are marginally benign, which is a positive. Asia is trading in the green. There is technical deterioration in sectoral indices yesterday. Mid caps and small caps breached some key moving levels, but but the continued decline from October 11th levels of 19,811, and we revisited those levels on closing basis at 17th of October. So, viewers, this is the point. From October 11th on, we've been in a corrective move of sorts, I can call it that, or at least from October 17th, it's been a trending way down one way. We are very close to the 200-day EMA level, and it's been kind of a fairly steep corrective move. Can we take a breather here? Just from a perspective of how markets work, that they fall, they take up a breather, then they may fall again as well. I don't know that. We'll come to that a bit later. But could there be a bit of a breather at these levels? Uh, you could argue for that. Remember, the last couple of days have been saying that these are levels from which bottoms get formed. Now, maybe, I mean, it's been proven horribly wrong, because from 19,100 we are down to 1,800. I did say that the gap of 200, 300, or 100, 200 points, and we kind of circa those levels. Could we make a bounce for you? The case is there. The argument is there. But let's see if it's just a bounce before a bit of a resumption of a downtrend, or could there be some semblance of sanity at these levels? It remains to be seen. What I do know is that, I mean, it's a mug's game to try and predict what the index will do. What I do know is that smart money is accumulating some quality mid caps, but at a very slow pace and without any hopes of near term gains. So most of the real smart money names that I spoke to over the last 3-4 days are all telling me that select stocks that are there on their radar, those stocks are available cheaper. Are they buying them? Yes. Are they putting in all the money to work? No, maybe 10%, maybe 12%, maybe 15%. But they are saying that we are buying this with the knowledge that the stocks may be available lower at some point of time later as well. And we are not expecting any gains in the next 6 months. So if you want to put money into the markets, current viewers, my simple submission on the basis of the conversations that I've had with people is that don't expect breakaway gains into anything. I mean, it may happen, but don't expect that necessarily. Maybe, just maybe, tactically, put in some money to work. This is where the SIP culture that has been induced by mutual funds over the last few years works beautifully. Spread out your investments into stocks, into mutual funds. That's probably the best way to do it. Fund flows, I'm not bringing it up today because, yesterday was an expiry day, very large numbers. I think let's play it by the year and see what happens today and then try and figure out if there is a trend. Big results today. So first on the large cap side, there is Reliance, Maruti, Bajaj Finserv, SBI Life Insurance. So the insurance plays there, two pharma plays in Cipla and Dr. Reddy's, and SBI Cards, a big determinant of what consumption spends are could look like. So watch out for these and other results. The not so large names, but large in their own right, like Indian Hotels or SRF, leading companies in their own right, or Oberoi Realty for that matter. But there is MGL2, there is RateGain, there is Inox Wind, and a few banks. So watch out for touch of results today. This is the other factor from a Nifty perspective. Could, because there's so many large names, could they have a telling move on what Nifty does on Monday? Remains to be seen. Reliance will certainly come out post-market hours. Remember that. Now, the stocks to watch. Railtel, revenues up 28%, EBIT margin 12.9 versus 8, 500 basis points expansion in margins, reported PAT up 77%. A lot of people accuse some of these railway companies of being exorbitantly valued, but just the numbers, very, very strong. Colgate Palmolive, the numbers looked okay, by the way. The margins got saved because of cutting down a lot of incidental other expenses. Reported PAT therefore up 22%, but volume growth numbers muted. The near-term outlook very cautious, and I think the Motilal Oswal note puts it into perspective well. And they're saying that it's a better than expected operating performance. Toothpaste category volume growth though marginally lower, and they reiterate the neutral rating on cautious near-term outlook on demand. So that's the view on Colgate. Dixon, I thought, was very good set of numbers. Revenues up 27%. In that business, margins will typically hover around these levels. If they expand in any good quarter, any quarter, it kind of becomes a good quarter. You won't see these businesses break the threshold of 5% usually. At least Dixon won't break 5%. Amber will not probably break 7%. That's probably the nature of the game, but very good. I thought pretty good numbers. You'll hear from the management first on BQ Prime at 9:45 today, and we'll come to that. I'll give you an update on what companies I want to do with us today. So, but Dixon becomes a very important number to monitor. Strong mid-cap earnings include an AGI Greenpack, revenues up 20%, EBITDA margin 22%, reported PAT up 65%. Very strong set of numbers. Watch out for AGI Greenpack. Watch out for Venus Pipes. Revenues up 51%, EBITDA margin at 18 versus 12.27, reported PAT up 95% at 20 crores versus 10 crores. Sadhana Nitro, revenues up 15%, EBITDA margin at 29.82%, and therefore a reported PAT versus a loss for Sadhana Nitrochem. Now remember, it's a very small company, so please be mindful of that. And the company's done multiple other things in terms of its performance over the last few quarters, if you will. But I think the debt for the company really came off, if I'm not wrong, and that's why that was good for Kamath Hotels as well. The debt really came off. In Sadhana Nitrochem's case, it's the best result for the company in the last 10 quarters. Quite something. Lakshmi Organic, revenues flattish, but EBITDA margins expand a bit, which is actually positive news. So that's to be kept in mind. But QOQ, the gross margin contracted quite materially, and that is a bit of a problem. You compare these numbers YOY always and not QOQ, but I'm just telling you that if you just look at what's happened quarter on quarter on the gross margin front for Lakshmi Organic, it was a very, very, very weak performance, and that is a problem. Gross margins were down 30 basis points YOY, 530 basis points QOQ. Keep that in mind. Quick Heal. Revenues up 52%. EBIT at 7.72 crores versus an EBIT loss. Net profit at 12.9 crores versus a loss of 12.76 crores. So optically, a very strong set of numbers. So that is good news. And some other earnings in focus include a Ugro Capital, when the reported PAT was up massively. Prudent Corporate Advisory Services, wherein both total income and PAT showed a steady performance. And NLC India in particular, I just want to tell you specifically that these numbers look weak. There is a reported PAT jump because of another income, one-offs, etc. But otherwise, revenues were down, EBITDA was down. So please keep that in mind. If you think of wanting to trade this stock, be careful that the numbers were not exactly the best set of numbers. So please keep that in mind. Coromandel, I thought, was a good set of numbers in a challenging environment. I haven't given those numbers, but I think that good set of numbers, and people expect margins to improve. So that's to be kept in mind as well. DB Corp, good set of numbers as well. Maybe the reaction has already happened, but keep that in mind. Punjab Chemicals, top line miss, bottom line beat, much like a couple of other numbers as well. So that's to be kept in mind. Chemfab Alkalis is the other one, wherein caustic soda and chlorine spreads came off, weighing down on overall profitability. So that's the other one to be kept in mind as well. So these are a few things to be kept in mind, in particular from a numbers perspective. Well, there's a viewer query: will Nifty touch 16,000 again? I'm no one to predict what the index does, Vasu, but I really doubt that could go all the way to 16,000 purely by virtue of the fact that India GDP is growing smartly. And yes, we might be expensive at 20,000, but I think 16,000 is doomsday scenario now. Of course, if there's geopolitics, so on and so forth, never say never. If all goes to 120, I still don't think 16,000 is in play for that. But really surprised if there is a materially large correction of that nature in play. Never say never. Base case, Vasu, I don't think anybody has that kind of a view. Um, so that's the long and short of queries. We're getting out of time. Just want to very quickly tell our viewers what's lined up on BQ Prime today. So Rahul Chadda, former CIO of Media Asset, talking at 10 a.m. on Talking Point. Promises to be a very interesting conversation because he'll be a lot more open to talk about sectors and tactical calls. So do keep an eye out for that conversation. 9:45 a.m. Saurabh Gupta of Dixon joins in. The first on BQ Prime. Very good, strong quarter. It would be great to talk to Saurabh about what went right in the quarter. Akshay Jatia, Executive Director of Westlife, joins in to talk about their numbers, and these numbers left a bit to be desired yesterday. Chalet Hotels, very strong set of numbers. Sanjay Sethi joins in at 11. And AGI Greenback, again, very good set of numbers. Rajesh Khosla, the CEO, talks in at 11:15. 12 p.m., Amit Singhal would throw light on consumers because of the numbers that Asian Paints came out with. Let's see if he's sanguine about the festive season. And Sriram Finance, YS Chakrabarti, joins in at 12:30 to talk about their quarter. And of course, the corporate conversations continue. Atal Kumar Goyal of PNB at 3 p.m. V. Ramana, Dr. Reddy's, joins in at 6:30 p.m. Packed day in terms of corporate conversations on BQ Prime. Thanks so much for tuning in to the Trade Setup today.